fundamentals from macro markets to fundamentals. Alexis, fundamentally what's happening today?
Very interesting stuff. So I think the monetary policy report for July is out. I think if you guys want to Google it, it's a big read, but I think what I'm looking for is I'm looking for further bullishness in the USD, and there are a couple of reasons, of course. I'm just going to flash through a couple of graphs, and let me just jump to the end of this report first, because I think one thing that kind of stands out is the uncertainty that's in the market. All right, so when there's a forecast, the general forecast after the monetary policy report is out is that there's uncertainty in the market, and what that means is because there's a combination of factors where if we are looking at a lot of things like what Julian mentioned, lumber prices, and if we look at diffusion indexes, which is like how the government takes a poll on the expectations of where inflation is going to be, it comes to a very interesting area, because if I'm just going to flash now, these are a couple of the diffusion indexes. So every dot is a bunch of people answering whether or not the expectation of inflation will be high or low. So it's like a high minus low thing. And if you just look at the core PCE inflation, inflation is expected to kind of be high towards the higher side. So people are expecting inflation to continue to go up. So it's not just about governments expecting where inflation will be, but it's also about consumers in the US and what they expect of inflation. How this leads to the money flow would be like if you expect prices to go up, right? If you for example, if you are expecting prices to go up, it would mean that you have to buy stuff now. You have to buy stuff quickly before prices get higher, in a very general sort of way. So if inflation is expected to be continuing towards the upside, consumer goods like electricals, or consumer goods like certain more expensive types of consumer durable goods. Like if you want to change your washing machine, you better do it now before price goes up more. If you want to change your fridge, you better do it now before price goes up more. So an expectation of inflation will give, people will be thinking, will prices continue to rise? And if prices continue to rise, then do I need to spend my money now for certain parts of of household needs or household requirements, right? Things that you need to change, things that you need to change out now, things like or even construction needs, like is this the best time to renovate my house? Should I renovate it now? Things like that. So with all these decisions in the market and the combination of I would say, reading through generally on the monetary policy report, it doesn't seem like the government will be raising interest rates very soon. And the main reason is because I think they don't have the problem of raising interest rates with a high inflation is probably going to be worse for the market. So I think for now it's really a hold on interest rates, and what they're trying to figure out is where is the money going in terms of treasuries, like how I think Julian mentioned as well. And the governments are still buying treasuries, but a lot of hedge fund managers or a lot of portfolio managers, they are also buying US treasuries because of this expectation of continued inflation, expectation of continued low interest rates, right? And I think this is one thing where you have the expectation of what is the expectation of price increases going to. If you translate it to across the board to the rest of the world, it will be very simply in times of uncertainty and because of COVID, there are many countries or economies facing uncertainty. Where best should I put my money now? Which country is the safest to invest in? So if you're talking about investments, if you're talking about even currency exchange, right? Which currency should I put my money in to wait out this period? And the answer still seems to be the US. So there is a demand for the US coming on. The stock market had its dips, but it still continues to go up. And if we look at just the US US currency minus. We have, I think, across the board, the last 5 days, Monday to Friday, the US kind of did did in terms of rally in a way. So we had the US dollar CAD going up. We had the dollar yen starting to go up after a dip. We had dollar Swiss a bit sideways. We had dollar Kiwi. Looks like it's heading to the upside, more in a range. And of course, dollar Sing has been going up, right? Because I think at the end of the day, if you are talking about if things are uncertain now, where best to put your money in, it still looks like the US in terms of, it is a globally traded currency. It's got more factors for it than against it. I mean, compare the US, you compare the statistics between the US, between the Euro, between the UK, the Eurozone area in that sense. If you compare the three countries, which of them are still doing seemingly better? We have the US with quarterly GDP 6.4%. So the perceived growth is still there. We have Euro at negative 0.3% in terms of quarterly GDP. We have the UK with a negative minus 1.6%. So if you're just comparing, right, just these three big majors, the US, the Euro, the UK, again, it's like, do you want to put your money in a economy that is having a positive GDP because that's the perceived growth there, or do you want to put your money in a country that has a negative GDP? So I think overall there is a broad-based sentiment. So it's a very sentiment-driven perception now, and also largely because of COVID as well. Import-exports has changed, right? Exports, I think US domestic consumption is getting better because of all the restrictions with China shipping their stuff over to the US, So there is a shift in terms of how the US is kind of purchasing, right? Do they now import from China versus do they now consume domestically? Because there is a restriction of moving goods and services across the country, across borders, right? So this is also partly contributing to the internal growth of the US, because I think with all these restrictions, with all this uncertainty around the world, US people, they are consuming internally. So very similar to how China is doing, right? China's GDP is also moving up, and I think the last quarterly GDP, you can see China's quarterly GDP has dipped, which kind of gives us the question, is it because China is unable to get their goods and services across the borders fast enough as well, right? Or what's happening? So I think there is a shift in import and export goods. And if you are shopping on, for example, Taobao or Alibaba and stuff, you will notice that shipping takes longer these days and prices are going up. So I think that is a kind of a question mark there. We can kind of look at to see the money flows. All right, so that's about it for me. I am still looking for opportunities of dollar longs, but I think based on last week, I do expect a slight retracement or some sort of retracement as the market breathes before it heads up. I don't think I can catch the dollar Sing unless it comes down a lot more. It's way above what I was looking for. But what I do like to see if we can catch will the dollar yen and the dollar kiwi give us any kind of noticeable shift next week. So I am looking for dollar longs still. And other than that, I think a lot of moves that have happened last week, they are at a consolidation level. I'm still short the Aussie. Not sure when I'll stop being short the Aussie. Sorry, Aussies. But yeah, I'm still short the Aussie for now. And that's about it. That's all I have for me, Paul.
Cheers, Alexis. Thank you very much for that. Always interesting to get your view on this stuff. We look forward to